Welcome to Debating Net Zero, where we navigate the complex journey towards a sustainable future. Our goal? To challenge conventional thinking and inspire action and thought leadership among executives and strategists around the world. So get ready for an engaging and enlightening conversation hosted by Fulton Company's Mike Ratcliffe and Rauf Mammadov. This is Debating Net Zero, where the future of our planet is in the balance and the strategies of today's businesses are on the line.
Hello and welcome to Debating Net Zero, the podcast where we tackle the pressing issues shaping our energy future. I'm your host, Michele Sachar. Today, we explore BP's recent decision to increase investments in oil and gas while reducing funding for renewable energy. Is this a strategic reset to adapt to current market conditions? Or is it a return to traditional fossil fuel reliance? We present two contrasting perspectives from Mike Ratcliffe and Rauf Mammadov on the implications of BP's new direction. So welcome to you both. I'm going to start with you, Rauf. Rauf, is BP's move a strategic reset in response to market dynamics, or is this a regression to old practices?
I do believe that it's a strategic reset. But before we delve into what they're going to do, let's try to understand what actually happened. So BP has been trying to transition into new energies for last maybe decade, but more recently, between 2020 and 2023, their share price significantly underperformed in comparison to Exxon and Chevron, who stuck closer to their traditional businesses, oil and gas businesses. Furthermore, BP's return on the investments from renewables and low carbon technologies, which they were prioritizing, were lower than expected. And furthermore, there were more uncertainties in these businesses related to their traditional hydrocarbon businesses. So they faced challenges in anticipating these returns, and as a result, they started feeling the heat coming from the investors, specifically the institutional investors, such as Elliott Investment Management, and as a result, and also as a result of the leadership change in the company, the new leadership decided to go back to oil and gas, and in order to stabilize their financial performance and again address these investor concerns. I think it's still a very pragmatic response. It's very similar to Shell's recalibration, which took place maybe a month ago, and I think it's an acknowledgement of the dire situation that BP is facing, and it was a difficult decision to make, but they have made it, and now they will be waiting for to see the results of it.
Mike, what's your perspective? Yes, please dive in. What does this signify? Return to traditional fossil fuel dependence?
Yeah, BP's announcement appears to be that regression to fossil fuel, which may be an issue. The company has positioned itself as a leader in the transition to sustainable energy, and this pivot undermines that commitment. While short-term financial gains may be achieved, BP risks falling behind the global shift towards renewable energies, potentially missing out on long-term opportunities in the sustainability sector. BP's revised strategy risks alienating multiple stakeholder groups. That's a big concern I've got. Shareholders interested in energy companies committed to transitioning towards sustainability. Maybe BP's reduced focus on renewable investment as a retreat from the progressive energy solutions, and it's potentially going to diminish the company's appeal. BP's lowered its target to cut oil and gas output by 2030 from 40% to 25%, and removed its previous goal of 20% to 30% absolute reduction in Scope 3 emissions between 2019 and 2030. And That's a big change. Investors who prefer the traditional fossil fuel investments might not be thrilled with BP's new strategy. They expect returns from shareholders don't look that promising. And the company's leadership remains the same, which might not boost their confidence from the marketplace. And following this strategic shift, BP share price has actually dropped 1.4%, indicating investor hesitations.
They can't seem to win either way. So let's continue along this path. Rauf, how do you respond to concerns that BP's strategy might hinder progress toward global climate goals?
I do believe that it's a valid concern. BP has always been known for being a pioneer among all these international oil companies or the energy majors in building a new identity. In the mid-90s, they had this Beyond Petroleum slogan, which replaced, British Petroleum. And then more recently, they have decided to become integrated energy company instead of being international oil company. So for a company like BP to scale back or change their course, of course, will have an impact on its peers as well. But we have to understand why they're doing it. The reason because they want to optimize their oil and gas portfolio is to be able in the future to fund these future investments in the renewables. So I do believe that it will have an impact, and I think it shows in hindsight how premature BP and probably Shell were in rushing into energy transition. But neither BP or Shell, they're not entirely withdrawing from their renewable energy investments. It's just they're adapting more disciplined approach. They're still active in the new energy space, but they're more selective. They have investments in biogas, in biofuels, in EV charging. These are all related to the mobility, and in other renewable investments now they're preferring capital light partnerships in order to unload themselves from these financial burdens.
Okay, that's interesting. But let's just go back to the situation that we're in now in the world. Energy demands are only increasing as are economic pressures. So, Mike, let me ask this of you. Is this strategy actually maybe just a realistic adjustment?
Well, whilst meeting the immediate energy needs is going to be crucial, BP's current strategy seems to be ignoring the bigger picture towards a global shift of cleaner energy. It's true that the recent developments, like the US administration's decision to withdraw from the Paris Agreement, these have slowed progress. However, such setbacks, I believe, have got to be temporary. The journey towards sustainable energy has its ups and downs, but overall, the momentum is going to continue to build. All we keep on hearing about is bad news in terms of global warming. So, investors and consumers will eventually favor companies with a robust sustainability practice and strategy. By shifting away from renewables, BP risks alienating stakeholders who prioritize environmental responsibility and potentially affecting the company's reputation and long-term profitability.
So that is a risk. So going back to you, Rauf, when you consider BP's decision to boost its oil and gas investments by 20% to $10 billion annually, what are the ripple effects going to be that might have implications across the entire oil and gas sector?
Well, I think it's symptomatic of the current situation in the energy industry, especially in the oil and gas space. BP is not the only oil and gas company that is rethinking their fossil fuel policy. Shell, as I mentioned before, have also mentioned that they're recalibrating. The others, such as Equinor, which was more active in the renewables, said that they will also rethink their renewable policy and maybe invest more in the gas, especially in the natural gas business. Well, it shows that, as I said before, this policy-inducive environment that these companies are operating is very uncertain and vulnerable. And this is how these companies are responding to the changes in the environment, as Mike said. The key economies like United States, when they're withdrawing from their previous commitments, it has a direct impact on these companies, and they have to adapt to the new situation. To answer your question, when the peers of BP or mid-sized oil companies, when they observe that there's a change in their strategy and there's a return to the investments in oil and gas, they may also feel validated to either maintain or increase their investments in the fossil fuel, and that will eventually may lead to the slowing down the collective efforts to diversify their energy portfolios. But this shift could also be very short-lived, and it may lead to a short-term stabilization. And then, as I said before, as the companies seek to capitalize on their returns from the fossil fuels, then when the environment or circumstances are feasible, they can then make investments in the renewable or energy transition.
Okay, so Mike, what is your perspective on this? How do you think BP's strategic pivot could influence the global energy transition towards renewable sources?
Well, when, something like, was it 5 years ago when BP really set out its whole strategy in terms of renewables, it was showing global leadership along with Shell. But now what we're seeing is this shift of strategy. It's reducing its renewable energy investments by over $5 billion annually. And this could have serious broader implications for the whole of the energy transition, because such a move might signal to the whole of the marketplace and policymakers around the world that major energy players are recalibrating and moving their commitments away from renewables, and potentially leading to a momentum in policy support and investment in clean energy infrastructure. And this could slow down the whole pace of renewable technology. But I think, Rauf earlier said sort of put BP and Shell together. I don't see that. Unlike BP, which really doesn't seem to have a clear strategy, I believe that Shell does. I think that what Shell has said is, okay, we're going to cut back on renewables, but we do have a plan and we're going to focus on LNG, which may not reduce emissions totally, but it's going to significantly cut back. And they're developing LNG for new marketplaces that just aren't there at the moment, like heavy trucks and global shipping. So the problem with BP is that they're moving away from renewables, but they don't have a viable strategy. That's the big problem. Shell, on the other hand, has been talking about for the past 2 to 3 years about an alternative strategy of LNG. So that's the big difference. And with both companies being European, the European market wants to go and see renewables and moving towards climate, impacts that are going to impact global warming. So I see that's the big problem. And I think that BP is not showing the leadership that we saw, even 3 years ago.
Totally understood. Very interesting. Thank you both for your insights. It's clear that whether or not these were strategic shifts, BP's pivot not only affects the company's trajectory, but also it has far-reaching implications for the oil and gas industry and the global energy transition as a whole. As for BP, remains to be seen if they are going to be potentially acquired by one of the other majors. We will keep watching these developments as they unfold, and we'll monitor and discuss their impacts on the world's journey towards a more sustainable energy future. Thanks for listening to Debating Net Zero. Don't forget to subscribe for more in-depth debates on the future of energy. Stay informed and stay engaged.